and welcome to the Money Show. I'm Kavita Thabliyal, and this is a show where we decode money so you don't lose it, definitely. So, for most Indians, buying a home is not just an investment, it's an emotion, it's stability, it's legacy. But let's be honest, it's also leverage, a 20-year commitment, a 30-year EMI, that's right. And here's the uncomfortable question: what happens to that home if something happens to you? Does the loan disappear? Does your family inherits the house or the debt? Today, we break down one of the most misunderstood financial products in India, home loan insurance. That's right. Is it protection? Is it mis-selling? Is it mandatory? Is online home loan insurance cheaper, or are borrowers paying lakhs more without realizing it? By the end of this show, you will know whether you actually need home loan insurance, how much cover is enough, whether online is smarter than bank bundled, and how to avoid expensive mistakes. So let's get started. Let's simplify this first. Home loan insurance is designed to repay your outstanding loan if you pass away during the tenure. Now, in theory, it protects your family from losing the house. It might sound simple, but here's where it gets tricky. Now, many borrowers are told it's mandatory. Finance the premium into the loan without knowing it. You know, they'll end up paying interest on insurance for 20 years. What they don't realize is a regular term plan could do the same job, sometimes even cheaper. But now with online home insurance getting into the picture, borrowers can bypass the bank and buy directly. So today we ask, is home loan insurance a smart safety net or just another cost layered onto your EMI? Let's bring in our experts. I'm joined by Deepak, Uniyal and Vivek, Jain. Hi, welcome to the show, both of you. And let's start at the very beginning. Okay, I just want to understand first, Deepak, let me just come to you. What is home loan insurance? Is it mandatory in India? Why do borrowers feel pressured into buying it at the time of loan dispersal? Deepak.
First of all, thank you for having me here, Kavita, and good morning to everyone and my fellow colleague here. So, Kavita, if you ask me, first thing, home loan insurance is should be mandatory, but by law, nobody can force while you're buying the home loan. It is your choice whether you want to take the home loan insurance from the bank, or you want to go out and buy, or you may have a good term insurance with yourself. So it is not mandatory, but because at that time of juncture when you are buying the most important asset of your life, you just tend to do whatever you are asked to do. So coming back to the fact, no, it is not mandatory, but it is important.
All right, it is important, and let's also know what does it actually cover. So Vivek, I'll come to you. What exactly does home loan insurance cover? What does it not cover? Does it only cover deaths, or are disability and critical illness also included over here?
So I'll start with just explaining what home loan insurance is basically, right? It is basically a type of term life insurance which kind of covers for your outstanding liability of the loan, and typically it is taken more for a home loan kind of a product, right? In case of any mishappening to the borrower, the remaining outstanding loan kind of gets paid off and squared off through the payment of the loan insurance, and the asset, which is the home in this case, is safe with the family. There are riders that you can take along with it. So apart from, basically, the term life insurance is pure term life insurance, where in case of death is when that payout kind of happens. There are other riders which you can take, but those are optional, like critical illness rider, as you rightly mentioned, or accidental death cover, disability covers. All those are available, but they are again optional, not mandatory.
Okay. So Vivek, you're telling me that if someone already has 1 crore term plan, they still need a separate home loan insurance policy, Vivek.
So see, again, as my colleague Deepak was mentioning, it is not mandatory, but it is recommended. See, let's go back to fundamentals of what a term insurance plan does. Right, term insurance plan is basically a income replacement plan, plus covering all your liabilities. Right, one is your regular income has to be replaced, and it has to also cover any outstanding liabilities. So if a person has enough life cover, typically I would say maybe 15 to 20 times of your annual income, to be able to live the same lifestyle in case the breadwinner of the family passes away, then I think your income, the regular income kind of can be replaced by the term insurance. Plus, if there is enough cover to cover the liability of any other loans, like such as home loan, then you can skip taking a separate home loan insurance. But as you all know, most of the people in India, unfortunately, are underinsured and don't have enough term life insurance. So, just to cover this liability, they should take
People who
home loan
also have,
insurance.
and people who also have insurance, they also most of the time have wrong kind of insurance. It's a mixed product, insurance and investment. You know, your protection, liability cover, your risk cover becomes the first thing when you talk about insurance. But Deepak, let's just elaborate this further. You know, we hear a lot about single premium policy. Now, what does this mean, Deepak? If the premium is added to the loan, how much extra interest does the borrower has to pay? You know, you will be ending up with what, more over 20 years then? So also the other question is reducing cover better than level cover? And a lot of heavy jargons, you know, come up when you look for home loan insurance online. So could you just break this down for us, Deepak?
So, Kavita will break this down in two pieces. First of all, you're right, a single premium cover isn't advisable at all. What happens is, let me just make it simplified. So, let's say I've taken a loan for 50 lakh rupees, and the I would be asked to take home loan insurance, which, like Vivek also said, I also believe you should. But what you should take is more important. You have to understand single premium is a premium which is paid once for the entire lifetime, which can be 20 years or maybe 10 years or 15 years, and you are paying upfront, and you're also, and that is added to your loan. So, which means, let's say I have taken a loan of 50 lakh rupees, and argument's sake, the 0.9% is practically the premium we pay. So, if my premium is 1 lakh rupees, I will have to pay interest on that 1 lakh rupees for entire 20 years, which doesn't make sense at all. What you should do is you should take a either a level term, or you should take a reducing term. Hybrid is also another one, wherein you can just pay yearly premium, and that will make a lot of sense. Coming to point two, it's your choice. Level term is wherein the cover remains same, wherein God forbid something happens to you in between. The loan obviously is on a lower side. It is a reduced amount. So after you're paid, your family has paid that loan, you still have some money to yourself. So level term does that. Reducing is, as your loan is reducing, your term will also reduce. That also makes sense. Then there are hybrid, wherein initially the term will remain same. After some time, it will start reducing. And the last one is your term insurance, which is which takes care of your loan, and after the loan is done, and God willing you survive, that term again comes back to you, and it takes care of your other financial needs.
All right, Deepak, but then the question over here is, okay, we understood you should buy the product that is not very heavier on your pocket, more than your loan EMI, okay? Now the question is, should you be buying this particular cover from the bank where you are already taking the loan from, Deepak, or you should go to a different player? How can you make the best of this particular scenario, and also which is cost effective, Deepak?
So, a very interesting question. See, if you have enough term insurance, then we don't need to buy this product at all. But seldom, I've been in industry for 2 decades. Vivek also said, I haven't seen even a single
Thing, because you started off with saying that term insurance is important, and if you have that, you really don't need if you're recommending that if a term plan is enough, I want to understand the maths. How much of
we
your
have enough.
the term cover, yeah, what should be the coverage, because see, we are talking about your all financial liabilities. You're talking about a home loan money, you're talking about your kids education, you're talking about your family's financial life after you, Deepak. So what should be, for example, if you could explain the maths to us.
So minimum universal formulas is minimum 10x. If it is 15, 20, amazing. And 10x plus home loan. So 10x plus home loan you should cover. Also, it's your choice whether you want to buy from bank or any third party. What is more important is your term. It should be not very costly, like I mentioned in my previous conversation.
Right. Okay, got it. So now we are talking about making it much more cost effective. And Vivek, this is where your expertise has to come. We are talking about online home loan insurance. Okay, please help us understand how is it different from bank bundled insurance? Why is it often cheaper? And also the underwriting structure, and is it stricter online?
Okay, so I'll actually break this up, right? As Deepak was mentioning that, see, the bundled insurance is typically added on to your loan amount. See, so I'll just take a simple example. You're a 30-year-old, you're taking a loan of 1 crore rupees, right? For a typically people take it for say 20-year kind of a loan, right? So on that, if you are taking a bundled or home loan insurance, typically you will be end up paying anywhere between 3 to 4%, which is about 3 to 4 lakhs. Which, if I convert that to a EMI at a 8% interest rate for just for illustrative purposes, would somewhere between 2,200 to 2,500 rupees every month. If we buy a 1 crore reducing cover online from any of the players, and you can actually compare and then select, then a reducing cover for this equivalent 20-year period would come at about 800 900 rupees. And as Deepak mentioned, you can alternatively look at a level premium cover. Even that would come somewhere in the range of 1,300 to 1,500 rupees monthly. So far cheaper than about 2,500 that you would be end up paying if you are paying the bundled insurance. One of the big reasons for that also is because that's a group term life cover, and that still attracts 18% GST. Versus if you're taking a retail cover, there is no GST after the regulation changes in September 2025. So that kind of makes it very cost efficient. And as I was mentioning, 800 rupees versus 2,500 rupees, and even if you go for a level cover, which in a way will ensure that in case of any mishappening, a remainder loan can be paid off by that, and the remaining money can actually flow into your family for to manage other needs at that important juncture.
Since we are talking about insurance, and Deepak, we all know it's a business of trust, okay? But I still want you to highlight, if at all there are any hidden costs, whether you buy it offline or online, just help us understand the hidden cost in it.
So, like I mentioned, the hidden cost is primarily if it is front end, which is a single premium. Otherwise, these insurances are practically given by the manufacturer, which is insurance companies. So they're not. It's just a simple premium. You just have to be very cautious while buying, whether you're buying a term or a group insurance, which is normally given by the bank. What is more important here, Kavita, is because it's our experience in insurance, Samadhan, that you have to be very sure that the product is covering the home loan. What we have experienced in last 7 8 years is sometime you are given an endowment policy which is extremely expensive, which has nothing to do with home loan insurance coverage. The premiums are very heavy. Also, we've experienced that one of my colleague was in a seminar where there were 300 ladies, and a few of them are widows. They were struggling to pay EMIs because in their home loan there's a product which was only covering critical illness, and it was a time of COVID, and COVID was not considered as critical illness. So you have to be just cautious of what you're buying, and when you sign that document, believe me, very rare people actually just go through the insurance. They're not even told. They just sign, and it's just tick in the box and done. So that's what you have to be more cautious about.
All right, so this is also a case of mis-selling, which obviously we know and we are aware about, which is a very important aspect of the entire insurance sector. But having said that, Deepak, I wanted to understand, so if someone is buying home loan insurance, whether online or offline, Deepak, what should they be looking into? Maybe a checklist that they should be keeping in mind before buying. What would that be?
So extremely important. Even if you're buying a home loan insurance, it's a, like I said, group insurance or a term cover. You have to make sure that you are sharing all your medical information correct. When we get claims which are rejected, it is primarily because we did not share our information, which is medical condition, which can be lifestyle issues, hypertension, diabetes, or maybe I'm a smoker. I drink regularly or occasionally. These are very, very important aspect, because God forbid something happens to you, despite with all good intention you took this loan, you will not get that cover, because you did not share the information, or you were not asked. Despite of whatever the situation is, it is your responsibility to make sure that you share all these information. And we see whenever we get such claims where the home loan is not paid, this is one of the home loan insurance is not paid. This is one of the main reason that people did not share that information.
Okay, that's very crucial aspect. But then Vivek, I just want you to highlight the risks over here. What are the risks in buying this kind of a cover online? And also, if you could just give us an idea of online claim ratio that must have been so far in the industry that we can see.
So I think, see, as long as you are making the right disclosures, you don't have to worry at all when you are buying a term insurance. As Deepak was mentioning, I think rightly mentioned that at the time of buying, you can compare the premiums of the insurance companies. You can look at the claim settlement ratios, but typically most insurance companies have very good claim settlement ratios, provided there is no non-disclosure done by the customer at the time of buying. So I think declaring everything is always advisable. The other thing is, when you're buying it online, we always have a medical test done before the policy is issued. So actually, it's always better that a medical test is done. Then you're very, very sure that if in case anything comes up, and maybe the premium may increase a bit, but then you are very, very sure that the claim will then kind of get paid in case of any mishappening.
Vivek, in what scenario do you see a claim getting rejected?
So a claim will only get rejected in case there is any fraud, impersonation, or any misdeclaration. Like if you have any certain pre-existing disease and you don't declare it in the proposal form, then the claim might get rejected. But again, there is a section 45 that protects the policy holder, that in the first 3 years is when the insurance company can actually null and void the contract in case of any misdeclaration by the policyholder. But after that, the claim has to be paid.
With that, it's a wrap on the Money Show as well. Thank you so much, both of you, for helping our viewers understand every aspect of this very crucial part of their financial planning. Thank you so much.
Thank you.
Thanks a
And for our
lot.
viewers,
Thanks.
this is the Money Show where we help you protect your money before you invest it. So that's up on the show as well. Thank you so much for watching. Goodbye.